had the biggest swing trade of the year, totaling over $110,000 on Nvidia. I also day traded Nvidia several times earlier this year. However, here's a comparison between my swing trade and day trading total profits. I made over 100 grand in swing trades, but only about 5 figures in day trades. At this point, you might be wondering,
why do you even bother with day trading then? Why don't you just save all that time and effort and focus on swing trading?
Yes, in this video, I want to reveal my secret in staying profitable overall in trading this year, which lies in swing trading. If you have watched my previous videos, you know that I've been a day trader for almost 10 years. That means the duration of all my trades have been shorter than 1 day. Most of the time, I enter and exit my trades during the morning hours. Sometimes they're done within 30 minutes or less. However, I improved a new pre-market trade planning routine since the beginning of this year. My old pre-market planning routine wasn't the most efficient in my opinion. It worked for me for many years, but I could have reduced so much stress, cost, and time spent if I had a way to streamline my entire trade planning process without jumping through all the various trading tools or platforms online. With this new and improved pre-market trade planning process I'm sharing with you today, I intentionally look for more swing trading opportunities during pre-market and the morning sessions. This way, I could capture bigger moves in the market, make more profits in the long run with less trades, and reduce the cost of 2 to 3 softwares down to just 1. In this video, I'll walk you through my new pre-market trade planning routine that you can copy exactly, or just take bits and pieces away to your current process, especially if swing trading is a better option for you. If that sounds good to you, please remember to drop a like down below and remember to ring that notification bell so you know the next time I drop another educational video like this. Now, without further ado, let's begin with the most crucial part of trading that every trader should develop, the morning pre-market trading routine. This is a process I've broken down into 4 steps, and I'll go through one by one with you. Whether you trade large caps, small caps, options, or even futures, you should always have a pre-market trade planning process. This is a time for a trader to analyze the overnight market conditions, what happened in the morning and in news, and develop an action plan for the trading day. So let's start with step number 1 of my pre-market trade planning process, scanning for gappers with built-in scans. I always start my morning with Stocks.io. This is the essential tool for me for steps 1 to 3. I've saved so much of my time and made my scanning process and stock selection even more efficient with the built-in strategy scanners. I customize them to fit the way I trade for both day trading and swing trading. So you can see the 6 built-in strategy scans over here that's built into Stocks.io. And during the pre-market sessions in the morning, I use these 3 over here. Let's start with the first one. So this one over here, you see pre-market large cap gappers. This is for my large cap day trading strategies as well as swing trading, mostly on the long side. This built-in scan essentially scans for the biggest gappers on the day. Often they are also the ones with the most amount of volume or relative volume. With this scanner over here, you can see that I'm scanning for stocks above $1 billion market cap, so definitely the large caps and the mega caps, gapping at over 3% on the day, and with at least over $1 million volume. And you can scroll down and see all the results here, and then you can see I'm sorting everything by gap percentage. So I'll usually use the top 5 results on the list for my gap up reversal long strategy, as well as the trend join long strategy. And some of these stock candidates on the gapper list that you see over here, after step number 2, they might also be fitting for my swing trading strategies. So let's take a look at the top gainer on the day, which is NIO. This is one of the Chinese EV stocks that's been gapping up a lot. You can see the gap percentage on the day is 18%. Also, relative volume is 2.68. That means it's been trading very, very high volume. 2.68, more than average in the last 2 weeks. So this is a stock I was watching for day trading on the day, as well as I'm currently swing trading. So if you take a look at this is my real brokerage account. I'm currently long NEO. This is a swing trade candidate. And no, we did not pick it up today. We picked it up on the first day of the gap up all the way over here. You can see that's my average 5.73, and we've been riding this along for a swing trade for the last 2-3 days or so. So today we saw a very nice gap up. And this is the exact process I do take for myself for swing trading. You can see this is exactly how I discovered other swing ideas I'm currently in. Besides NEO, I also have Palantir. Got in on the first or second day of the gap up over here, and also Google that we also took a couple of days ago with the gap ups. But remember, just going through step number 1 of this pre-market trade planning routine is not enough for day trading or swing trading. We need to make sure we move on to step number 2 in just a little bit over here. But for now, let me go through the rest of the built-in scans over here, and I'll explain how I use them personally. So the next pre-market scan I use is a pre-market small cap gappers over here. Just as the name suggests, that instead of the large cap plays, this scanner is the one I use for trading small cap stocks. So you can see on the criteria over here, I'm scanning for stocks below 1 billion market cap. So you get a lot of small caps and micro caps. Volume, I want to see at least 100K, and I want to see at least 15% overnight gap. So the results over here, once you scroll down here, and once again, I'm sorting them by gap percentage. This is where in this result, you'll see a lot of these like small cap, lower floats here. You can see, only 1.7, 4.6 million shares float. You see the pricing a lot lower, usually below $10 or less. But that's where you see the most amount of explosive volume, right? Earlier when we were looking at large cap stocks, you're looking at stocks with 1.5 to 3 relative volume. Here, because of the nature of these small caps, they have a lot of momentum. When you have low float and high volume, that's when you get a lot of churn. In terms of the volume, you'll see something like hundreds of relative volume. That's how explosive these stocks could be. So just make sure when you're scanning for these kind of small cap stocks to trade, whether you're on the long side or the short side, make sure you're narrowing down the results that have over at least 2 relative volume. I use this scanner in particular for 2 kinds of small caps trading strategies. The bag holder daily short setup, in which I am shorting stocks that are gapping up to recent daily resistance, or the short trap consolidation long setup, in which I'm long and more bullish on these low float stocks with a catalyst on the first day or even second day of the gap up or breakout. But unlike the first strategy scanner we talked about earlier, I do not use this particular built-in scan, the pre-market small cap gap scan, for swing trading. Because one of the rules I've developed for myself near the end of last year is no swing trading for small cap stocks. Just absolutely not. I usually don't even consider it. The overnight risk on these small cap stocks are sometimes greater than the large caps. You can either wake up rich or you wake up broke. And I don't know if it's just me, but you let me know. Whenever I swing trade these kind of small cap stocks, I wake up broke. So moving along now to the built-in scan number 3 over here, the gap down scans for all the market cap stocks. This is a very interesting scan, not one that I use every single day because it doesn't always give me the results I'm looking for, but it's very useful when the time comes. I love to use this scanner in particular here, in which I'll sort it by the largest gap down percentage here. You can see all the losers on the day. I'll use the scanner for my daily support dip buy strategy for large cap stocks, especially when the entire market is gapping down drastically. Obviously, because of that, I don't get to use this particular setup or the scanner every single day, but I probably use it maybe once a month or so. But when the strategy works, it works very well. But the scanner is also very useful for the bag holder short setups and the extension daily short on the small cap stocks. So after I use these 3 built-in scans to scan for potential strategy and trades, the next step is step number 2, news analysis. Now with this step, I used to have to switch back and forth between 2 or sometimes even 3 other trading softwares and all the subscriptions. The cost just added up over time. But now I can scan for news along with scanning for gappers in step number 1 with these scans all on Stocks.io. And it's extremely easy to read the news. So for example, back to the pre-market large cap gapper scan here, after I have the results, sorting it by gap percentage, I'll scroll down and simply click the ticker. So you can see, let me enlarge here. Once you click the ticker, you have a very nice summary of all the different news headlines for the particular stocks with all the sources and the first line of the summary over here on Stocks.io. So you can see over here, NIO, the stock we were looking at earlier. Today, I can tell very easily that it's gapping up after securing a huge 470 million cash injection. So that's huge for a company for NIO. And if I want to, I can click this news headline over here. That'll take me to the external article and a link if you want to read on further. And just like the earlier step, all the market data on the news is live. The fact that I can do steps 1, 2, and 3, which we'll talk about in a little bit, of my trade planning process in the morning, all on the exact same platform, it has been a game changer. There's an affordable monthly subscription as well as an annual plan that saves you even more money. So if you're a serious trader, whether it's day trading or swing trading, I definitely recommend Stocks.io. It'll improve your stock selection, make the process more efficient, help you find the best opportunities for your edge, and save you tons of time and money. And remember, these software costs are write-offs for your trading business. So let's go back to news analysis really quick here for step number 2. How I analyze news for small cap stocks and large caps is very, very different, and you must understand the nuances. For small cap stocks, you have to understand that if you're trading those things, the news are just kind of like a reference point only. Sometimes you'll see the stock rally up even with no news. Both of these scenarios are very possible for small cap stocks if, number 1, the short interest is very high. So if you look at some of the pre-market gappers over here on the small cap stocks, you want to know about the short interest here. Anything above 25% or even 20% is considered high. So if the short interest is very high or there's very high volume, for example, if you see the stock trading hundreds or 2 digits of relative volume, the news sometimes does not matter at all. A very good example is a stock that was on the gapper list just a couple of days ago, CAPR. I remember this one because I remember seeing the news that there just wasn't anything that significant, but the stock, however, rallied up for many days. So you kind of take a look at the news here. You can see, sure, major shareholder purchases $14 million worth of stock. And you can see that for the first catalyst on the stock is that, they are rising in pre-market on plans to file some sort of application for one of their drugs in order to get FDA approval. Now, that doesn't mean one of their drugs is approved at all. It's just like they plan on filing the application. In my opinion, that's not really significant news, but you can see on the chart over here, the stock absolutely rallied for the next, 2-3 days. So regardless of how good the news is, it doesn't really matter because you can see the relative volume on the stock is pretty high even today. A couple days later, the short interest is very high at 25%. Now, the one thing it doesn't have is a low float. 25 million shares float is not extremely high, but it's not a low float at all. My point is just that for small cap stocks, specifically if you're trading them, never use news catalysts as the determining factor for you to go long or short. It should simply be a supplemental factor to everything we talked about: float, relative volume, and short interest. However, for the large cap trading strategies and the large cap gappers, whether it's day trading or swing trading especially, I find the news catalyst to be a lot more important and reliable. So going back to some of my recent swings I have as examples over here. NIO, we know that it's gapping up due to the Chinese stimulus package a couple days ago. And today they have, what do we say, $430 million of investment injection. So that's very positive news. Therefore, that's the reason we see a lot more follow through on this large cap stock. Palantir, for example, on the day of the gap up, sure, we found it on the gap scanner, but it's because the catalyst is that they were being included in the S&P 500. That's huge news for a stock like this. And of course, they were also involved with AI. Another AI play that we added on the swing trade is Google. A lot of artificial intelligence update and the chart, in which that's the part we're gonna talk about in the next step. The chart is prime for another breakout. These are just some examples of the importance of doing research on news catalysts on your day trades and swing trades. This is true especially for swing trading. You gotta make sure that your swing trading thesis, like the ones I already taken, all the positions you saw earlier, they are not just supported by fundamental catalysts, but also technicals as well. Which brings us to step number 3 of my pre-market trade planning process, planning out the technical key levels. This is a very crucial part for both day trading and swing trading, so make sure you follow along here. I'm gonna show you some demos on how I analyze the charts. For most strategies I personally use, if I'm long biased, whether it's day trade or swing trade, I want to make sure that the chart is bullish and breaking out above key daily resistance or breaking out above the range. And don't worry, I'll walk you through some chart examples in just a second and explain what I mean by bullish breakout with key levels. And vice versa, if I was filtering through some short ideas, I want to see the stock being very bearish with more downside potential. So let's go back to the top gainer on the day here, NIO. As I said, I was already long the stock for a swing trade, but you can zoom out and see the daily chart. So you can see here, this is the kind of chart I want to see. So you can see on the daily chart over here, when I first took NIO around 570s over here, you can see that it was gapping up above some decent recent resistance over here at around 570s. Now the stock is gapping up and closing above that key level here. That's why I got long. Now once the stock starts breaking out, I want to see it clear through these resistance at $6 over here, and then once again 630s, and then you have some more resistance up here at 680s. Essentially, I want to make sure that short term, the stock has a lot of more upside to go. Almost like a staircase from 570 to 6 to 640s, then 680s. Now today you can see this thing gapped up all the way to 770 here. There's a lot of decent resistance up here. And so therefore it couldn't break through all those resistance all at the same time in one day. But that's what I mean by the stock is bullish. Again, you're holding above multiple resistance. So let's look at another example here, Tall, T-A-L. So this chart is not bad, but at the same time, I don't like the fact that it cannot clear through that recent resistance right here at 1180 over here. You can see that line. Not only is the resistance from 2 days ago here, it's also the resistance from back in May and April. So I don't like the fact that it kind of gapped up but sold off under that resistance. It's still worth watching. If the stock is consolidating above that level, then you can potentially see upside back to the $13 or even near 14 over here. So these are all bullish charts. It's just like I don't like the way a lot of these gap ups have sold off recently. Let's take a look at some more examples here. Ideally, a stock that's not another Chinese stock. Let's look at DJT. I think this is the one that, the Trump media over here. So, this is not exactly a bullish chart. You can see it's long-term downtrending especially after this huge gap up here. This key level here, 45, gapped up, couldn't hold, and just been selling off since then. You can see it break down tons of these like support area. So no, this is no bueno, not a good bullish stock to look at all. You see a small bounce, but it's probably not going to last. So that's a good example of a bearish stock. Oh, another one, T-Doc. This one, let's take a look. So this one is actually on my swing watch, but I'm not currently in the position. I'm simply watching. The key level on the stock to watch is this area, $9 range. You can see $9, this stock broke above, once. Second time it tested it, sold off and been selling off to 850s. And now it's retesting at $9 once again. So if the stock can hold and consolidate, then you have upside to 980 over here. Then 1060s, not bad, the risk reward wise, and potentially even higher to like 11s. So this is a stock that I would like for a potential swing trade if that key level holds. And it's a bullish chart if it's able to hold that consolidation key level at $9. So that's how I look through many charts, both bullish and bearish, in a very short period of time. Usually each ticker, it'll take me less than 10 seconds, 10, 15 seconds. And that's how I look through like 20, 30 charts, just all on Stocks.io during the pre-market hours. Step number 4, creating a watch list or trading plan. This is the step that finalizes everything you've done so far from step 1 to 3. Essentially, you're now taking all the candidates and the stocks that you've selected from the gap scanner that has good catalysts for your long strategies and checks out in terms of technical analysis. That means you're looking at stocks that have bullish charts on the daily, enough volume traded, and fits your overall strategy on the long side or the short side. You can see some of these example watch lists here that my coaches and I have created for the Humble Trader community every single morning. You see the strategy name on the very top, the news catalyst that's causing the stock to be in play today, the key level to watch, the closest resistance and support, and plan of action for executing that trade. You don't have to follow this watch list format exactly, of course. This is just to give you an idea of how to put everything together that you've done so far in steps 1 to 3 into a summary and create a trading plan. I know I just threw a lot of information at you. If all of this seems very overwhelming, don't worry. While you learn the ropes of how to build your own pre-market trading routine, I can help you at least narrow down some names and the stocks to trade on the weekends. I have a free weekly watch list that I send out every single Sunday. The link is in the video description below. And remember to check out Stocks.io, the all-in-one trade planning tool for you that'll take you through steps 1 to 3 in a more efficient manner and cost-effective way. This is truly the essential tool I use for day trading and swing trading this year. So make sure to check it out and let me know what you think. If you want to learn more about the details of how to use this scanner step by step, then check out this video over here.